So I was recently showing how I backtest and pretty much stress test my EA and the strategy that I have in really volatile conditions or unexpected spikes like this one, and also mention how we could do it in this situation. Is an economic crisis. It's triggered by 2008 situation swap, all of that, and the idea that you should have in these scenarios is, if I'm looking to invest or even trade these scenarios, like I can, yeah, of course, position myself and get the whole move by just buying, but that it's a reality for holders, like for traders like me that like to combine trading plus investing. I see opportunities, every opportunity in like every push, the upside and to the downside, it's money opportunity. So what I like to do is to position myself in a way that I'm able to trade every type range and at the same time maintain my margin safe, keep risk management with simple strategies, simple things. So I'm able to model my, in this case, the code plus the strategy in different scenarios with real data and with a very powerful tool called Strategy Tester. I can pretty much do whatever I want with different ranges. I'm not trying to predict. I'm not trying to create an AI model or some fantasy. I'm just trying to understand how my EA will execute and how it will behave in different scenarios, like the ones that we have with economic crisis, with COVID, with this unexpected drop with some gold news, or there's also miners. There's a lot of variables that you can have that you cannot control actually. So the idea is to understand your model. So the point here is that you will have to create something simple. You can code it, or there's a lot of EAs that already do this, and it's grid trade. Pretty much the base of the sauce is grid trading. You don't even need, in this situation, hedge or martingale. You could do it just with grid, because the only thing that you want is to know, because you will be counter trading. That's the main or the key point of my modeling and backtesting. That is that I'm always counter trading. Why? Because that's the reason number one to have only one variable. You're against the trend. You're not trying to predict it or to position yourself sniper entry or anything, or to try to understand a pattern and try to enter. No, you're against the market all the time. And that's also a key factor to why you trade Forex, commodities, indices, maybe crypto, but I don't recommend crypto. I recommend economic assets or coins or anything related to solid actives. I don't recommend this in stocks because, for example, Xauusd, you know that even in the worst situation, USD or USA will come back. This drop, this bull run means USD is taking hits, and the drop means USD recover. That's a very solid piece of data for us to backtest. We have all the range after an economic crisis, and then we have a big two spikes that we really don't expect, and a huge range of almost 5 to 6 years that was only in danger because of the COVID, something unexpected by anyone. So tell me who made money in COVID, and very few people, because price action was crazy. And if you compare it with 2011, it's not the same, but happens the same. If USD is taking hits, gold will tank, will go up, and when USD recovers, will go down. We are currently actually experiencing something like that in the previous, or in the aftermath after COVID. This is the third time we broke all-time high with gold and dropped hard. That's mainly because of the rates. They're not increasing, so that means USD is safe, or at least it looks like. And what you want to do is to take the biggest and the worst case scenarios for your strategy and model them. So let me show you. Go to my web page, to the model section, where I explain a little bit what the model or the EA try to do in different scenarios. I pretty much test 4 cycles: 24 to 2010, 10 to 14, 14 to 18, and 18 to 24. This is the range, 2014 to 2018 mainly. This is the worst case scenario. This is the start of the, or at least the best data you can get, because before that trading was very low volume to the both internet and all of that, you know, today is very easy just to open an account and trade. Back then it wasn't, so data and liquidity and volume is really not important for the ranges we trade nowadays. So you can start from 24, and then I test 24 to 2024, the whole 20 years. I do that at the beginning, at the end, just to make sure that I'm not overfitted or that my profit is saving the account. Like the max drawdown needs to go to the 100% or less. That's the idea of the stress test. Go to max margin. So as we can see, I have here my FX book report, and we have the drawdown is bigger. This is the whole 20 years. That's what I mean when trading can save the account or something similar. In this case, the max drawdown is 85%. Let me show you how the models work, or at least for me, how I view the market. As you can see, how I test. This is the full range. This is the first cycle, and this is the main one. Like, as you can see, we in reality have 85% drawdown. That's this range. Here is where we max stress test the account. So what this means? This means that my account, my 100k initial deposit with 1,500 leverage. This is with 1,500. I was testing with 1,000, but in reality, leverage is not needed in this type of strategies. You will balance the lots versus the margin, but I can hold 85%. And for example, here, what I know, this you can do it. My point is, anyone with grid can code something basic that opens trade just X dollars or X pips in X distance. And you will know, for example, if my EA, it's important to know when your EA will stop or when will open the first trade. I know it opens at 1566 in this range, and I know that the last trade before closing it's at 1331. So this is our X range of pips or dollars, and I can open this amount of lots, and I will have this 24% range drawdown. Sorry. So what's the idea? Like, if I want to hold 100% this type of scenarios, I need to adjust my drawdown to the 100% of my account, you know? But for example, if I adjust to the 100% of this 2013 range, I'm for sure blowing this range, you know? So it's not suited for the total conditions, or it's not pragmatic to the data that you already have. It's not efficient. You're not using the data correctly because you're adding risk, you know, you won't handle. So that's the difference between investing and high yield trading. Investing models are based in the data that you have already there, and you're trusting that. You're not trusting words or fantasy theories or something like that. You're trusting the economy moves and reactions based in whatever you're telling the code to do, you know? That's why trading by levels is also very important, because every level the more you backtest price, maybe not with Xauusd, but maybe you trade cable or Euro USD or Nasdaq, you know? Every pair is solid in economic situations, like it won't go to zero and it won't trend forever. So you can trade by levels, and backtesting will show you, based in your strategy, what are the best levels to start diversifying the risk. So the importance of the model or the code is to be able to understand first how much can hold your margin can hold based in lots and in trends, in this case, or spikes or moves. If you don't manage, remember, we don't have filters or anything. Let's imagine this is just a simple grid code. And after that, you only have to start like understanding. So there's a gap between 52 and 31, you know? So in that range, what I can do, or what I can do in this range, or can I close here at 0.04 trade, or do I want to, from the first order to here, instead of ending with 0.04, end with 0.4, or I want to have 0.01 here, or what I want to do. That's the important thing, you know? The possibilities are endless. And as you can see, this model mainly goes for holding, max risk, and going for the full retracement, or for a good retracement. It's very solid. Then it's very slow when price ranges, because this model adapts to economic factors. It doesn't try to push the the market, so it makes sense. Here's the 20 COVID range, also very smooth, 30% drawdown. So pretty much this is the worst case scenario for this model. That's what you want to know. Of course, this model is with one logic only, and the one that I'm showing is my full algo working with the full network. That's more advanced, but anyone can do this. There's a lot of codes where you can do this, and it will help you a lot to develop the trading and the model that you are having to trade, and understanding the risk especially that you have when trading your strategy. So I recommend to do this.